Backtesting is probably single-handedly one of the most important aspects of trading to not only begin to understand a strategy, but to also refine and tweak it and test it so that you're ultimately confident with how you apply the strategy. So in this video, we're going to go through how to set up your charts for backtesting, how to approach multi-time frame backtesting, and essentially just run through it so that we can get comfortable doing so. So I'm going to use Euro US dollar, and we're going to start on January 2019. So what I'll do is I'll navigate my chart back and essentially find where 2019 begins, which is right here. And then what I'm going to do is I'm going to drop a vertical line on basically December the 31st. That way I know where the backtest will begin. Now, if I want to mark out every single month, what I can do is I can navigate to the monthly chart, and you'll see that I have this line that we print. If I just hold Control and click, you can duplicate the line, and basically what this is doing is it's going to create a vertical line on each starting of each month. So you can see that this line is on November the 1st, so we'll do it all the way till the end of 2019 just to mark out the entire year. So now if I go down to the daily chart, we can see that each month starts on the first of the month of that period. You got December 31st and then January the 2nd. Continues all of January in price action here, and then ends on January the 31st. The first candle is February the 1st. The last candle is February the 28th. We have March the 1st, and so on and so forth. So now we know and can very clearly mark out our months so we know what we're trading. So like I said, we're going to start with the beginning of 2019. So I will hit replay and essentially just drop the line down, and we'll get rid of that line there. Perfect. So now what we can do is we can navigate back up to the weekly chart, and we can just take a look overall on what structure is showing us first and foremost, just to get a general idea of how we are moving. And we can see that overall we've created a low, we've created a high, and we've basically maintained those lows, and we've created a high here. The rest of this move has basically just been slowly trickling down to the previous low. We've spiked the low, basically grabbing the liquidity on the weekly time frame, and that's essentially all we're seeing there. So now if we drop down to the weekly chart, we can just take a look at what we see. And one other thing that's helpful to do is opening up your object window right here in the bottom right corner and basically grouping certain objects so that they're organized. So what I did here was I selected all of the vertical lines, which are the monthly markers, and then I hit the create a group of drawings. So now it's created this into a group, and if I right click on the folder, we can click rename, and I'll just put monthly markers so that I know that that's what they are. And the cool thing about this is I can actually hit the lock button, and now every single one of these lines is locked, so they won't be movable unless I click the unlock button, which will unlock all of them in one go. I can also hide them all with one click, so it's a really great way to be able to manage objects and keep your charts and object list super clean. And what you can also do is you can actually rename the objects themselves. So if you either single click, it'll allow you to edit the text, or you can hit right click, hit rename, and then we can just put weekly low, and we can just do this one as well and go weekly high. And basically what this does is we're able to now see very quickly what these objects are, so we can move them around and basically interact with them in an easier way. So now we'll mark up the daily levels. As we can see, we've created a high and a low, and we have now broken the low, creating a lower low. So if I just draw that out, put that on daily, and we have a high right here. So we can see his prices ranging between this high and this low. We are still in an overall bearish push when we're looking on the daily. As we can see, we're putting in lower lows and lower highs. As soon as this low is created and started to push away, we can denote that as the low because we broke this low right here, which is also the weekly low, which is the spike that we've seen on the weekly chart. If I just navigate back up there, we can see that we spiked the low. We didn't actually close below it, but when we're looking at the overall weekly chart, we are still in a downtrend as well. We're putting in lower lows and lower highs. So we know the overall momentum of the weekly and the daily. So we'll see basically what happens when the daily approaches the high here, or continues to push down, and we'll be able to frame up trade ideas just like that. And now what we can do is we can drop down to the 4-hour chart and again just simply take a look at what we have going on here in terms of market structure on the very beginning of our backtesting session. So what we can see, if we look, we have created a bit of complex structure within this daily chart, but what we can see is we've created an impulsive move to the upside, created a low, we broke this high here, and then we broke this high here, so we can see that we are trading, or we're trading in this overall range, but once we actually broke this low here, we created a high here as price went down, created a lower low and a lower high, but then we broke to the upside. So as we can see from the 4-hour chart, we are now starting to switch bullish. So if I just draw on this line here and this line right here, you can see that. And again, what I can do is I can mark, if I just go up to the daily one more time, we can see that if I click this line here, we're selecting that, we can just hit daily low. And if I click the top one, daily high. And the neat thing that TradingView has actually added recently is when on the object manager, if you've put in visibility filters, so you can see I don't have this showing on the weekly, and if I navigate down to the 4-hour, you can see that this is not shown on the daily. So when I'm on the daily chart, these lines that are the 4-hour high and low actually have a orange eyeball. You can see which objects are actually visible on that particular time frame that you're on. So again, we'll just quickly add in a name for here just to keep things organized. This is the 4-hour low, and this is the 4-hour high. 4-hour high. Perfect. So we can see on the 4 hours now we're starting to make higher highs and higher lows. We're approaching the overall high of the daily. And we know that the weekly is still bearish overall, but we do have a fair amount of range when we're looking at the overall weekly chart. If I just zoom back out again, if we were to be pulling up a bit more, we could pull, far up. Doesn't really matter, to be honest. The market's going to do what it does. We could do something like that and then break to the downside, putting in a lower low, which would still be valid bearish structure we'd be seeing. So something to keep in mind there. So now we can navigate down to the hourly chart and just take a look at any particular points of structure, points of reference that we could be looking at in terms of framing up overall trade ideas. So if we look on the 1-hour chart, we're going to start identifying any points of interest that have already occurred that we can start framing trade ideas off of. If we look at a couple different areas, what we can see is, we just scroll back a little bit, we can see price was making higher highs and higher lows, breaking structure. If we look at this impulsive move, and I'll zoom in just so we can take a look at it a little bit cleaner, we can see that we created a series of highs that were broken with fairly large bullish candles overall, but it was when we reached this point we actually got a true surge in momentum that ultimately broke structure. So what we can do is we can actually just mark that on as a point of reference. And what we can see is that price is actually reacting off of that right now. And if we go to the 4-hour, let's just take a look at that similar point and just see what we see. And what we can see on the 4-hour as well, just to show a little bit more framework, is we had this large impulsive move. So we had an order block down in here, and we also had an order block right here that we can see prices tapped into a few times already, which is also in line with this 1-hour order block that price is now reacting off of. So we can see that price has been bullish. We can see the creation of the higher highs and higher lows that we've seen on the 4-hour, and which are translating to the overall 1-hour chart. And again, what we can do is we can go down to the 4-hour, go up to the 4-hour chart one more time. And what we can do is just mark out this point of interest as well, just because this was a quite large move on the 4-hour chart. So just framing up everything that we see on the chart that makes sense. So what we can see is initially our order block would be this bear candle that created the move that eventually broke structure. And what we can see is the next candle doesn't actually do too much. We do get momentum, but it's still within the range of this overall bearish candle that created this higher wick. And then if we just kind of keep moving on price just a little bit more, we can see that we start to get lower momentum, lower volatility. So we can actually move our order block to this zone here, and we'll look on the 1 hour and just see if that actually makes sense. And what we can see on the 1 hour, if we just want to clean up that zone just ever so slightly more, we can see that we can actually use this candle right here. We can see that the next candle created an imbalance that the next candle actually filled almost immediately, and then that's when we started to see the rally up to the upside, breaking structure and creating basically this large impulsive move to the upside. And the reason why I'm calling out this zone is effectively because this would be our last point of structure that could potentially hold to look for trades on a long potential if we're starting to see that the daily chart moves bullish, if we're going to see a deeper pullback potentially into these levels on the weekly chart. So now that we have all of that information sorted out, we can begin backtesting. We can start up the overall bar replay. There's two different ways that you can do this. You can either go candle by candle on the hourly chart, just waiting for certain bits of price action to play out essentially, or you can just hit play and then pick a speed and just watch price action essentially play out. So what we can see on the hourly chart now is we broke this low here, we created a lower low, we broke this high right here, creating a higher high. Looks like we managed to tap into an order block here that broke structure just right here, and we started to see price move to the upside, breaking structure once more, and it looks like we've spiked this very small order block here, and we do have a really messy looking order block essentially right here. If we go to the 4 hour, what we can do is we can just take a look at the candle. One thing to note about doing multi-time frame backtesting, although TradingView has done a lot of work in making it more efficient, being able to actually drop down timeframes without breaking the bar replay, what you'll need to notice is if I drop to the 4 hour, we can see that the 4 hour starts at 1 Eastern and the previous one is 9. So if I just look at here, we can see that this is 3, so it's not actually the full candle more than likely. So if I just pop this out to 5 a.m., which would be the next 4 hour candle, we can see that if we drop back into the 4 hour chart, that line that I drew was actually in the middle right there. And you can see the next candle is already printed. So it's one thing to be mindful of when you are switching time frames from, say, the 1 hour to the 4 hour. You can, I guess we'll call it cheat, because TradingView doesn't show intermediate candles or doesn't print the candles by ticks when you're navigating up time frames. So you can see that we have 1 bar of the new 4 hour candle loaded, but when we actually go to the 4 hour chart, it's going to show the entire move to the downside. So just wanted to highlight that because there is some synchronization that you will have to take note of. So it's important also to note when the 4 hour candles, what time they close at, as well as the 1 hour candles. So when you're using the hourly time frame to move price around, to note that this candle, the 4 hour candle, would end at 4 a.m. and the next one would start at 5 a.m. So if I just take this back 1 candle and then I navigate up to the 4 hour, what you'll see is that next candle doesn't print, but as soon as I press the next candle, which enters the 5 a.m., which is the first hour of the next 4 hour candle, we can see that price shows this very heavy bear momentum candle. And it'll be the same thing for the 15-minute candle if we are halfway through an hour candle, for instance. So this is 5:45, we go to the hourly and we'll have the full 5 o'clock candle printed. So we'll be able to, in theory, see the extra bit of price action left behind on the 15 minutes. So being able to synchronize that is the only bit of detail that you'll have to keep in mind when you're jumping from time frame to time frame using multi-time frame analysis on TradingView. So with all that said, let's actually jump into a little bit of back testing here just to show how I would be approaching things. So if we just go back up to the 4 hour now, what we can see is 2 things actually. If I just take this back just to show the structure, we can see that initially price created a higher low, broke to the upside and created a higher high. So what we can do is we can actually move our structure. We can see that we are in a bullish trend on the 4 hour. And if we just continue back on to this point, we spiked up to the upside, so we didn't actually create a new high. And we are approaching the low of this structure here, which is our higher low. And then when we get to the next candle, which we've already seen printed, we can see that we've now officially broken that low, switched back to bearish. and we can see that this is our new range that we're playing in. And the last little bit of confluence or area that we'd be looking for any sort of buys to hold, since we've been flipping between buys and sells in this case, potentially monitoring what price does at this order block. So what we'll do is we'll drop down to the 1 hour chart. We'll see that we've switched bearish, and we'll just play price forward, seeing what happens. So see price continues to push down, have a little bit of a pause, pull up, we've broken structure and actually wicked it, so we didn't actually fully print in new structure. So if we put a line here, for instance, this would still be our overall range. We have this large impulsive move to the downside. You can see that we are tapping into that 4 hour order block that we denoted a little bit earlier. We'll see if it holds or if it continues to drop down. What we can do is we can go to the 15-minute chart just to look at structure a little bit cleaner and see if we can get an entry if this block does hold. So we can see this, we tapped in once, pushed to the upside. We didn't actually break structure, we more or less just wicked it. But again, if your trading plan or how you view the markets is on wick breaks, you would see that this would be a valid break. And that would be a break of structure, which then you could be looking for entries on an order block here. But in this case, I'm going to go based off of actual candle body closes, just for simplicity's sake. So we'll just keep playing price forward and wait for a clean structure break. So we can see now, if we map that in, that we have a true break of structure right there, structure, just so it's clear. So you can see that we've now broken structure to the upside, and what we can do is we can draw in a order block right here with this bear candle. That's the candle that created the move that broke structure. It's very large in this case. In a normal trading circumstance, I would likely navigate down to the 5-minute and see if I can refine that, but given the realm of this backtesting session, we're only going to stay as low as the 15-minute currently, and also TradingView will not let us go any lower than the 15-minute with the amount of bars that they allow us to backtest with. So anyway, so we will continue on and just see what happens if price does get down to this area. What we can do is we can set an order buy limit at the top of the order block with a stop loss below. So it's a 26 pip stop loss. We'll add a pip buffer, making it 27. Again, this is a higher risk trade, mostly because when we look at the higher time frame, we can see that price has switched bullish on the 1 hour now. On the 4 hour, if we just navigate up, we can see that we're still in an overall bearish trend. We more or less just wicked that low. We've reacted off of a 4 hour order block that we refined on the 1 hour, but again, the daily are still in overall bearish trend. So this is against the overall prevailing trend, but trades like this still do work, and we can be very profitable trading retracement trades well. So we might just have to be a little bit more aggressive on how we ultimately approach the management. But anyway, as we continue on, we can see we'll just keep moving price forward and see if we get tagged into the trade into that particular order block. We can see that price is more or less just putting in higher highs and higher lows at this stage. Broke this high here, just right there, so printed a low. We matched that low, basically putting in a double bottom from a price action standpoint. So we're going to see if price still taps into this. We can see that we're still moving to the upside, but there's a potential that price will come back down and tap into the zone. You can see that price looks like it might tap in, or it might just barely miss our order. And it looks like it's going to just continue pushing to the upside, missing our order, which is bound to happen. And what we can see now is if I just mark on this little bit of structure right here, we have another break of structure. So we can close off this order for the time being and just look overall. If we go back to the hourly chart, we can see we've also broken structure. And if we look on the hourly first and foremost, we will identify a 1 hour point of interest. So we have this down move, and then the up move that broke structure, created imbalance along the way. So we know that price is more than likely going to come down to these areas to fill in the imbalance. As we can see, we will denote our order block with this candle right here on the hourly as our point of interest. And we can drop down into the 15-minute and just refine that ever so slightly if the opportunity presents itself. So what we can see is price broke to the upside, broke structure. If we just navigate back, we can see that we had this bearish candle right here. And again, if we look at the next candle, it's still within the range of the bearish candle, so we can actually refine it to that candle, since the next candle was a large doji showing more or less just a slowdown in price, and it was really once this candle came in this candle, we see the rapid expansion to the upside that broke structure. So we'll use this as our order block, which is about an 18 pip range. Now set in order again at the base of the order block, 18 pips. We'll add a pip buffer underneath the zone and see if we get tagged in this trade. What we can see is because we're putting in higher highs and higher lows and starting to continuously push to the upside, it is increasing the odds of taking the trade. Since price did just barely miss this order block, just by a few pips really, so it's always interesting to see that, but ultimately it filled the inefficiency that it needed to and continued on. So we'll just see if we now get tagged into this trade or what happens next. So we can just see right now we are breaking structure very slightly. If I just mark that on just for information's sake, we broke it, but then we broke back down, came back up, retested, more or less took liquidity from this area rather than actually breaking structure. So we can still monitor this zone as a potential entry point. We'll just keep playing price and see if we get tagged in. And what we can see is price has come down, it has tagged our entry, and we have been brought into the trade. And we can see that price tapped in the order block, consolidated for about 2 candles, and then we started to rapidly expand to the upside once again. So what we can do is we're going to look on the 1 hour chart. We can see the trade that we are in currently, and the targets that we would want to be setting for at the very most is want to identify any points of interest or order blocks on the 1 hour, just to show areas that may hold relevance, causing price either to react off of, that we can either look to close our position. In a live market, we could think about taking off some of the position. So if you had 1 lot, for instance, buying, you could take off half a lot or a quarter lot just to secure some profits, or just think about aggressively managing, and if price comes up and starts pulling back, knowing that we're likely to see some sort of reaction potentially at that area. So we have this or a block here, as well as this block right here. And actually more specifically, if I go to this block here, we can see we broke structure on this candle. We had a high right there. Our low would have been right here or right here, depending. And we can see that either way, we broke structure. This is the origin. And then there's also this up move candle before a move to the downside. We can see that the next candle, again, doesn't do very much. It spikes the low and then pulls back up, and then the momentum comes in, so we can denote that. But now what we can do is we can just drop down to the 15-minute and look at how this trade plays out overall. And what I'll do is I'll slow down price a little bit, and we'll just monitor this trade, see how it continues pushing to the upside. If it does, we can see we've broken 15-minute structure just right here. And so if I zoom in, if we were looking into scaling into this position, for instance, and we look at the 1 hour, we can see that we broke structure right here. So if I just put on that line just for information, we've broken the structure to the upside with quite the impulsive candle. We have started to slow down more or less, but if we look at the time and look at from a session standpoint, this is during the Asian session, so volume is much lower in consideration to these type of candles that are happening during pre-New York and New York Open. We go down to the 15 minutes and see if there is any possibility of looking for a potential scale in. Let's see if there is any potential for that. And what I'll do also is I'm just going to move this out of the way so that we can actually see the price action. Now, if we look at this overall bit of price action, we can identify a 15-minute point of interest. You can see that price moved to the upside, it consolidated, and then it blasted to the upside. And this is ultimately what broke the structure. So what we can actually do is we can draw a point of interest on this candle right here. And the reason I would select this candle is because if we look at the way price action, it created this move to the upside, and then it more or less just consolidated. It dipped back down and then this is truly when the real momentum was created that broke this bit of structure. So this is what we can denote as a larger influx of volume that was entered into the market to ultimately push structure to the upside. So what we can do is we can be a little aggressive in that we can put an order on. So we can see that this is a 2.3 pip zone, and we'll add another pip, so that'll be 3.3 pips, just like that. And we'll see if price pushes down, tags us in and continues up, or if it just continues to push down. And one thing to also note when we're looking at the 1 hour structure is because we've broken this structural point on the 1 hour, we can actually manage our trade. So we see we've created a high that didn't actually break this high, but the low, it formed a low here, and then that is what ultimately pushed price to the upside. So we can actually manage our trade just below this low. We can either go right tight up with the low, or we can factor in this wick. But essentially you want to put your stop loss underneath the low. So we've now effectively locked in 1.9% on this trade. And if we're looking at the 1 hour chart, just from a point of interest standpoint, we can see that we have our order set right here. We can see that little bit of consolidation that was on the 15-minute is in the form of this bearish candle here. So we have a move to the upside, an almost pause in the market with a bearish candle, and then another move to the upside. So there's two different points of interest that we can be looking at on the 1 hour chart. We have this 1 hour point of interest as well as this point of interest. This one made more sense on the 15-minute, but that's not saying that price won't come down to this point. So we could take a little bit of a loss and we could see price do something like that, which is totally fine. It's just when looking on the 15-minute chart, this area does look a lot cleaner for a scale and entry, especially given how rapidly price has been moving to the upside. So we'll just play price forward and see what happens. So we've been tapped into the trade, and we can see that price has broken structure once more, and we've gotten this very large move to the upside. And what we'll do is we'll just move up to the hourly chart and just kind of play price forward a little bit more. We can see we've broken above this zone. Broken this point of structure here, which is why we have this low. We created a high here and we pulled down and then broke that high quite impulsively. There's a great deal of force there. So what we can actually do is move this trade stop loss just underneath this low. And in this case, we would just be a little bit of risk on the table here, which is totally fine on that regard. And we'll go down to the 15-minute and just keep playing the trade forward. One thing we can see too is if we either didn't take this trade or move this trade to break even, depending on how you want to manage the trade, we can also potentially look at this order block right here. We can see, if I zoom in just a little bit more to make it a little bit cleaner, that price created this down move before a large move that broke structure. So again, we'll mark in the structure break. Just like that. So we've broken structure. We have a down move candle. We can denote that as a 15-minute order block and place yet another order just on there. So 5.6 pips is the zone. I'll do 6.6 to give it a little bit room to breathe. And we'll just play it forward and see, does this trade get tagged in? It does, just barely, and continues on. We're at about 6 a.m. in the morning, so this is pre-New York, so this is roughly 3-4 hours into the London session, and New York will be opening in about an hour and 30 minutes. So this is the highest time of volume in the market, so we can start seeing large moves to the upside, which is great. Again, we'll just navigate up to the 1 hour and just see if we get any structural breaks, which we do right here. See that price has now broken this structure. So what we can do is we can just manage our trade just below this wick right here, which is the low of the move. We can see that price moved up, it moved down, and it moved up. Or if we want, we can also look at it from a line chart perspective and see we've gone down and then we've gone up. So another confirmation that price did go down. Obviously, the line chart doesn't factor in the wicks. It's either based on the open or the close of the candle, depending how you set it. Something to keep in mind there. But we'll use this point right here. So we now have this trade locked in at 6.67%. We have our main trade running at 4.6%. So we have about 10% locked in, and then this trade is just under break even. And what we can do is we can see that we broke the high, broken structure. You can see that from a 15-minute, we've filled in the inefficiency that we would have seen in this area. We're starting to pull back. If we go to the hourly chart, we can see that the inefficiency that was created on this level right here has now been filled. So more than likely, we could be seeing a deeper pullback. 4 hour, we can see we're tapping into basically what looks to be a 4 hour order block as well. So there's a lot of confluence for this trade to start turning around, or at least giving us signs that we might see a bit of a reaction here. So we'll see how this pans out. See, we've tapped into the 1 hour zone that we looked at earlier, and we can see that we have just barely broken structure. Let's see, so now we have a clear break of structure and a continuation on that, so we can again just move our trade under the low here, so we can lock in this trade to about 2.7%, this trade to 11.97, and this trade to roughly 5%. So we have roughly 17, about 19, almost 20% running on these 3 trades, all taken from more of an aggressive standpoint on this last order block that would have held on the 4 hour that ultimately created this stronger move to the upside. So this is more of a counter trend play when we're looking at the overall momentum that we're seeing on the daily. We can see on the daily perspective, we're creating lower low, and then we're more or less just consolidating, ranging within that price action. And we'll just see how price reacts to this 1 hour order block. And what we can always do too is just monitor price on the 15-minute and see if we get a reaction, maybe a move back in that breaks structure and then tags into an order block. We can look to close out our position potentially on the break of structure on the 15 minutes if that looks clear. I'll just keep playing price forward and see what happens. See, we're pushing back into the zone a little bit deeper. So there's that break of structure that we can see. If we go to the hourly chart, we'll just see that we have now been, the trade was here. So again, we're looking at the time frame correlation. So we can see that if I bring this candle effectively back here, only showing up to the 45-minute candle, and then go to the hourly, we'll have this candle, but because I was 2 candles in on the 15-minute, it showed the next full 15-minute candle. So we can see that price then continues to move down, tagging us out of all of our trades that we had taken on this move right here. And overall, a great set of trades from management and just overall execution standpoint. Again, this was more of a counter trend or retracement style trade, because as we can see on the daily, like I had mentioned, we're still in an overall bear trend. We're caught between this 2 range. That doesn't mean we can't take trades on an intraday perspective to capitalize if the market structure is showing us things that we want to see. Again, we had overall bullish 4 hour price action. We did have a change to bearish, but what we've seen from this large move to the upside that cleared quite a bit of structure out, that we would be potentially looking for buys if they presented themselves at this particular order block. Again, we refined the order block by looking at the first down move candle and then just seeing that the real momentum of the move started after this candle right here, and then we refined the order block on the hourly chart. We could have taken the order block on the 1 hour chart and gotten a very clean entry from that very bottom point, but the downside with doing that is this is quite the large and heavy move to the downside. So just simply putting a buy position at this point and having a 9 pip stop, you're trying to catch a falling knife. You're fighting momentum in that case. You see a structural break here, so from that perspective, we're still just seeing lower lows and lower highs until we switch here, which is why we started looking at this point, because we've now switched to a bullish structure. And then when price tapped in here, that was our overall key to get into a trade. And then we just started to see price starting to make higher highs and higher lows before we started breaking down here. And if I just play price forward, we'll just see the trend begins to change to an overall bearish styled move. And at this point, what we could begin to do is look for short opportunities now that we've tapped into this 1 hour order block and we are starting to sync with the overall higher time frame momentum. We can see that we've started to get heavy momentum. We're filling in inefficiency at these particular points, which is why price pulled back into that area and has effectively closed all of the inefficiency at that price point. And effectively, this is how we would approach backtesting and continue on the process. We would just keep using the different time frames, keeping in mind where we are on the time frame that we are on lower. So again, This is 9:45, so the last candle of the hour, and we can see this is the whole 9 a.m. candle. And if I just move that forward one candle, we'll see we wick down and then move back to the upside. So if I just move that candle back, go to the 15-minute, add one candle in, we can see that's the wick down. And if I switch back to the hourly chart, we'll see that whole candle prints. So we would just need to be mindful of that. If we're looking at 1 hour structure, we'd need to, again, bring it to the 10:45 candle to get that full 10 o'clock candle, and just repeat the process. Same thing with the 4-hour candle. We can see that this candle would end at 1 p.m. Eastern time, and we can see with the 4-hour candle, price basically engulfs this candle. So if we just take that back, we know that the candle will end at 9 a.m., the next candle. So we just go back down, you can see that this is 8, 9, go to the 4-hour. This whole candle has now printed because we're in the first hour of the next 4-hour candle. So we'll see the price will push up. We'll go back to the 4-hour, and we can see there's the full 4-hour that would end, and the new candle would start at 1 p.m. So if we go to the next candle, we are now into the first hour of the next 4-hour candle. So we go to the next candle, we can see that the full candle has printed. And again, if we go to the daily, we'll see the full daily candle because we were only halfway or 3/4 of the way through the day. And so the daily candle finishes at 6 p.m. Eastern time. So if I just move my chart to 1800, we can see that if I navigate up to the daily, I will have this full candle here on January the 8th. And if I go back to the hourly and print one more candle, which is the 7 p.m. candle, or basically pre-Asia, the Nikkei open will be at 8 p.m. here. And go back to the daily, what we'll see is the full daily candle has printed. So something to keep in mind when you are navigating your way through time frames. Just understand what time you're at and how that affects the candles in question, or else you may see more price action than what you actually want to see. I hope that this video has made approaching multi-time frame backtesting much simpler and given you things to consider when navigating the various timeframes, as that can be the biggest and most confusing part about approaching things. Now all that's left to do is to start digging into backtesting, digging into the strategy, learning things, and applying what you've learned to the live charts. I'm very excited to see all of the backtesting charts being shared in the backtesting channel and watching the community progress.